Welcome back to the show. Before we get to my next guest, I just want to remind everyone, make sure you're subscribed to the podcast and to my free newsletter, nataliebrunel.substack.com. That's where I publish a free weekly Bitcoin and economic news update that you can listen to or read in 10 minutes or less. I'm also gearing up for the third annual Women of Bitcoin Brunch in Nashville at Bitcoin 2024. I'm so excited. We will be giving away free tickets. And this year we're hosting a raffle at the brunch to raise money for women in distress. You can actually support the cause. Watching this show, you can donate via the QR codes on the screen. And if you use my favorite Lightning wallet, Speed, they will match funds up to $3,000. We're going to be giving away fun items like block clocks, cold storage wallets, little hodler dolls, and more. So I hope to see you all in Nashville. And now it's time for the show. Welcome back to the show. I am really looking forward to this conversation. I have been wanting to talk to Tom Lee for a very long time. You might recognize him from his very bullish hits on CNBC. Tom is the co-founder and managing partner of Fundstrat Global Advisors and FS Insight. I'm so excited to talk to you, Tom. Thanks for making the time.
Glad to be here. Thanks.
Well, as I mentioned, you're one of the most bullish people that I see talking about the macro outlook, especially when it comes to Bitcoin. But before we get there, I just want to hear a little bit of your origin story. How'd you get to be doing what you're doing for those maybe not as familiar with your work?
Sure. Well, I've basically spent my entire career after graduating from college. I graduated from Wharton, doing market or equity research. I was originally a technology analyst covering the wireless industry. And, in the early 90s, that industry only had 34 million cell phone users around the world. Today, it's like 7 billion. And that industry was hyper growth or an exponential grower, really next to internet. And one of the things I learned in my many years covering wireless is that most investors underestimate the durability of a megatrend because they're anchored in how the legacy system works for them. So a lot of folks, when I was doing wireless, thought long distance and local telephone were huge companies, AT&T and these regional bells. They didn't think any cellular company was going to survive once they run out of money. And of course, as you know, cellular pretty much ate the entire telecom industry. Mm-hmm. And in the early 2000s, I started adding other areas of focus. I started doing bankruptcy research for JP Morgan and small cap research. And then finally in 2007, I became a macro strategist for JP Morgan, chief equity strategist. And in 2014, I left, started our own company, which was Fundstrat Global Advisors and fsinsight.com. And the idea was to really democratize institutional quality research, which is what we've done for the past 10 years. So we look back, we have 10 years, I think a little bit more than 30 employees now and clients in 26 countries. So we're doing well so far.
Yeah, sounds like it. Well, with your experience with emerging technologies, what you said earlier made me think about the power of the network effect that Bitcoin is benefiting from. How did you hear about Bitcoin and why did you develop such a strong conviction for it?
Yeah, Bitcoin. Now, I first heard about Bitcoin around 2016. And that was before 2014. Oh. And that's because at JP Morgan, there was talk at the time that our FX team at JP Morgan, so this is probably 2012, 2013, thought that Bitcoin could potentially be viewed at some point as a currency. But it was a very controversial view because at the time, it was very hard to get pricing information for Bitcoin through traditional pricing feeds. And maybe equally important, the reputation wasn't great. So I think the firm felt there was some reputation risk for doing a more involved analysis of Bitcoin. But when we started Fundstrat, we were less constrained by these sort of reputational risk issues. So it was a chance for our firm and our research team to really do a deep dive. And that's, I think you kind of hit it on the head that one of the things that really persuaded us about Bitcoin is well, one, blockchain actually was a pretty unique technology because it was really so censorship resistant and it actually worked really well. I mean, there hadn't been any false entries on the Bitcoin blockchain, but maybe the more important fact was, even if there's something we don't completely understand, the fact that Bitcoin's price was pretty easily explained by the number of active wallets and the activity per wallet, which essentially is network effects, shows that there was a price dynamic that, even if we didn't fully understand it, could actually explain why the stock, why the stock value or the aggregate network value could go up quite a lot over time.
Well, I know that your short-term outlook is $150,000 when it comes to the price. So I do want to talk to you about price, but so many people who watch this, who love Bitcoin, they do see this as more of a movement, a mission, a transformation of our financial system. They see a future where nations really adopt it as a reserve asset. So I'd love to hear your take, both short and long term, when it comes to the price, but also just this asset and how it could transform the way that we interact with value.
One, I would just point out, I think it's easier to have conviction on the longer term price than a shorter term. Because in the short term, there's a lot more factors beyond fundamentals that affect, a price of anything that trades on a market. And for instance, just recently, everything happening out of Germany and Mt. Gox is creating short-term headwinds and, potentially even breaking technical patterns, but it doesn't change where Bitcoin should be 5 years from now. But the price target of 150,000 is actually based on work from our head of digital strategy, Sean Farrell. And he's looking at a combination of his essentially what looks like a stock to flow model and a essential, like basically a price to book model. What is Bitcoin cost to produce, and what is that break even, and what multiple should you assign to that? And he triangulates to 150,000 roughly by the end of the year. And I think that's pretty achievable. I mean, it really principally only happens if the S&P actually can rally into the end of the year, and that's our base case. And if someone's asking, why should they be interested in Bitcoin? So let's say you have some folks listening to this and are maybe curious, but they're not convinced they should own any. I mean, I think that question has already long been settled because, Bitcoin is now essentially a bona fide asset class. I mean, it has the backing of BlackRock, which is the largest asset manager in the world. Larry Fink even today was speaking post earnings about how important Bitcoin is to the future of BlackRock, and it's something that they're encouraging clients to adopt. I think that the mistake someone might make if they're interested in Bitcoin is thinking they have to go 100% of their portfolio into it. They only need to put 2% or 5%. And, if you think about someone sitting on cash, that's like 1 year's worth of interest on their portfolio. They just have to dedicate to crypto. We made that recommendation when we first wrote about Bitcoin, that they should put 1 to 2%. Today, if they didn't rebalance that recommendation, it's 80% of their total portfolio. So it's been a huge winner for our clients, and many have told us it's really changed their lives by making what they saw as a kind of a low risk bet, 2% allocation into crypto. And I think that's how people should look at it today, because Bitcoin isn't peaking. It's not that widely adopted yet. There's still so many skeptics, and there's many financial firms that are restricting their clients from having access to exchange versions of Bitcoin. So the ETF today is not even approved for many firms, and it tells me that there's still a lot of future holders of crypto. And I think that mistake someone could make today thinking Bitcoin's not relevant is the financial system does work really well in the US for wealthy Americans, but even in America, I think only 45% of Americans actually have a bank account, and another 25% consider prepaid credit cards and debit cards as their primary form of banking. I mean, banking is very expensive in America, and that's for one of the wealthiest nations in the world. Outside the US, crypto is really going to prove to be a much more low-cost banking system for folks, especially if they want to do remittances and move money around the world.
Coin Stories is proudly brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and AI. As a publicly traded leader, Bitdeer boasts a massive 900 megawatts of operational data center capacity and an additional 1.1 gigawatts under development across 3 continents, positioning Bitdeer as one of the most diversified and power-dense computing companies in the world. Bitdeer's leadership laid the groundwork for the original advancements in Bitcoin mining ASICs. It's really the only company in the industry with the track record and clout to disrupt the market again with groundbreaking new designs for the next generation of mining ASICs. Now, Bitdeer is leveraging years of expertise in data center and cloud management into high performance computing through a recently announced partnership with NVIDIA. Join Bitdeer in reshaping the world of Bitcoin mining. Learn more at bitdeer.com and explore how they are pioneering the future today. No, that's such a good point. I mean, if you drop below a certain balance, the bank will actually charge you. And I'm sure that's very tough for a huge section of the population that's been really struggling with affording what's happening with inflation and prices in general. I want to turn to more of the macro, but first, do you think there's a limit to how high Bitcoin could go? I saw an article the other day from someone I recently had on the show. Fidelity's Jurian Timmer predicted that the price could even go to $1 billion. I mean, do you think that's possible with more and more people allocating a small percentage that ultimately turns into a bigger chunk of their portfolio because of the price appreciation? But how far can Bitcoin go?
Well, I think that maybe as sort of a minimum sort of target for Bitcoin, like, hey, when does Bitcoin have to reevaluate whether it's peaking is when the value of Bitcoin exceeds the value of above ground gold today. And that's 16 trillion. And the reason I think that's a fair benchmark is that, gold might have some industrial uses and it has jewelry uses, but the principal reason it's got 16 trillion of value is it's viewed as almost a singular hedge against currencies and against calamity. And to me, Bitcoin is far more resilient and useful if we were ever in a circumstance where you actually need to start using gold. I mean, if you try to, carry $1 million worth of gold, you probably need a couple friends to help carry that. You can carry $1 million of Bitcoin on a wallet or, in your mind if you can memorize your address. So to me, I think it's a far more useful hedge against calamity. But on top of that, of course, it has other uses. In fact, over time, it's arguably going to be pretty widely used. Maybe not for direct payments, but as a source of collateral or type of collateral. And so I don't know. So I mean, it'll be some multiple of what gold is today, but I would say reaching 16 trillion seems somewhat reasonable.
What do you think about the political forces starting to embrace Bitcoin? We've had both RFK Jr. as well as recently Donald Trump coming out saying that they will protect the right to self-custody and just embrace Bitcoin, possibly even to back U.S. treasuries. We've heard talks about that. Can it be used to solve our debt problem? What are your thoughts on all that?
I think those are all really novel ideas. There's going to be a lot of security implications that have to be figured out, and what it means for custody. But I would say that this is pretty eye-opening. If someone is skeptical of crypto, and now you see in a presidential campaign, one of the parties supporting Bitcoin and even accepting donations in crypto, and we're not talking a fringe candidate. It's someone who betting markets think has a 65% chance of becoming the next president. I think it's a huge deal, and it makes a lot of sense because Bitcoin is already probably quite widely used by many government agencies anyways. I think that's what people forget, is that they think Bitcoin is only used by like pirates and drug dealers, and that's not the case. I'd say it's probably only 15% of all network activity today.
Do you think that this will force the hand of the opposing party, that everyone will just start embracing Bitcoin and we're going to see pretty much every candidate across the board in all sorts of elections talking about Bitcoin?
Yeah, I mean, I think some of that takes time because, I'm sure you've noticed, and a lot of these listeners have noticed, that there is a generational bias against crypto, that those who are against it tend to be older, and that's because the traditional financial system suits them well, and maybe people know stocks and bonds, and they might know gold, but they don't really know if they care for this digital thing. But what people forget is that the global economy increasingly, the growth in GDP is increasingly native digital. I mean, AI is actually proving this. I mean, all of the value creation in AI isn't in the physical world, it's in the digital world. And is it an overestimation to say that in the next 10 years, 75% of all incremental GDP is native digital? If it probably is, then do we need arcane definitions like local currencies and I mean, why wouldn't it be a digital-based money is actually the preferred way to actually settle payments? So I would say, to me, it looks like as time passes, this generational objection is going to disappear.
Well, you alluded to this earlier, but the idea that Bitcoin is a currency has been controversial, especially with governments who want to be able to issue fiat. Do you see that changing and evolving, or do you think that Bitcoin will primarily serve more as a store of value?
I mean, I think Bitcoin's blurring, but even what the definition of money is, I mean, it's already blurred the definition of community benefiting from holding something, because in a traditional financial system, let's say you take Amazon and you have Amazon customers, and they contributed to the growth and the fact that Amazon is one of the largest companies today. It's really the customers and the loyalty of the community of buyers and sellers. But the only people that benefited from that are actually the shareholders, the ones who actually provided the capital to Amazon. So it didn't create value for the community itself. I mean, Bitcoin is so different, right? Because Bitcoin is benefiting those who are actually holding it and using it. And that's why I think it is really blurring what an asset is, because it's blurring loyalty and rewards along with equity and capital and rent seeking. I mean, all these concepts together. So the idea that it's also blurring the definition of money, to me, makes sense. I mean, I'm oversimplifying it, but airline points are actually money, but we don't view it as currency, but actually it is money. In fact, there's a bill in Congress that potentially might eliminate interchange fees that credit card issuers can charge, and it would literally implode the value of all these hundreds of billions of dollars worth of airline points, which are essentially money in many people's minds.
Tom, I actually did an episode on those points and the fact that we see about 30 to 40% inflation in those points. So you got to use them because you lose them in terms of purchasing power. And Bitcoin, I think Bitcoin stats, stacking those is better. All right. I know that you're very bullish, but I have a lot of viewers that are actually feeling very bearish right now, not just about Bitcoin, but really the macroeconomic environment. They think that a recession is looming, that we could really hit some sort of a wall. On the other side of it, I mean, they have to come in and print, right? Because they're going to need to keep the whole thing propped up. What is your take? What do you say to the people that are feeling very bearish?
I'd understand why people are bearish, because the Fed essentially was planning to give the economy a heart attack by raising rates at the fastest pace ever to kill inflation, and how the economy fared was a secondary consideration. But here we are, more than a year after the last hike, and the economy's actually doing pretty well. So there's an expiration of the risk of a recession. And I've been following markets for for more than 3 decades, believe it or not. And so I've experienced and covered many recessions. Recessions rarely happen when markets are all saying a recession is imminent. Markets participants aren't that smart. So the fact that so many people think a recession is imminent, and we see it. I mean, we do many meetings with clients, institutional investors, that view recession as their base case. I mean, that would just mean everyone suddenly is a great forecaster of the economy. And as you know, nobody can forecast the economy. We don't try to forecast the economy, but the only reason we think a recession is less likely is because everybody thinks a recession is likely. But logically, There are things weakening. I mean, I guess I'm not going to try to ignore it. We know consumers are running out of excess savings, and the job market is getting softer. And we know housing has become a very difficult market. It's unaffordable, and then there's parts of the country where there's huge rise in inventory. Durable goods spending, like on appliances and cars, I mean, it's absolutely tanking. I mean, used car prices are going to fall a lot. And there's an inventory correction. I mean, there's been a lot of destocking of excess goods inventory. Those are what's causing the slowdown. But the mistake I think anyone will make is to say, oh, well, that means this is going to lead to a recession. I mean, number one, housing, durable goods, and inventory are all extremely rate sensitive. So the minute the Fed starts cutting, all of those reverse. But second, the bond market, credit markets, corporate bond spreads, quality spreads, things that you think should be blowing out if there was a recession are absolutely mid-cycle. And look at the stock market. I mean, so I would say if someone is saying that they think a recession's imminent and they're bearish, they're shouting at the market. I mean, I don't know anyone who's made money trying to listen to an economist to bet on risk markets. It's really the wrong way to invest.
Does the current state of the economy concern you, given that so many people are struggling? I don't know if you've seen some of these viral social videos where young people are comparing Walmart grocery bills from 3 years ago, and they're not up the standard, CPI measure. They're up sometimes 100 or 200%. And then on the other side, you have the S&P at all-time highs, and the people who own assets are richer than ever before. And there's this great divide, and we keep spending as a government and increasing the deficits. Like, how does this play out?
Yeah, I mean, there is a lot of inequality. I think it's really unfair because, as you're pointing out, people who are long assets or their lenders or asset owners are benefiting. Now, that does mean, by the way, the best inflation hedge so far has been Bitcoin, right? Because, I mean, if you compare that, you take the Walmart bill and then put the price of Bitcoin, Bitcoin's done a lot better than anything and would have been a good hedge. But, you know, for as long as I've been following markets, I've heard the same argument that 40% of the country is miserable. And if you look at the Federal Reserve's survey of consumer finances and you build what you think is a normal budget for people, roughly 50% of the country, since I've been following markets, lives paycheck to paycheck. They've never, in fact, 40% of American households are net recipients of transfer of payments from governments. So they don't actually pay taxes. They get payments, like whether it's food stamps, et cetera, or assistance. So America has always had this divide, unfortunately, where roughly half the country doesn't pay taxes as a recipient of transfer payments. And I think when people post these things, they're getting a megaphone, which is great. I mean, I'd love to see a way to figure out how to have people suffer less, but it's always been the case, actually.
It's time for a quick break to hear these messages from my partners who make this podcast possible. Next up, Bitcoin 2024, the world's largest Bitcoin conference, is coming to Nashville this month. Join us for 3 amazing days of keynotes, panels, networking events, and my Women of Bitcoin brunch. The Bitcoin conference is where I launched my podcast 3 years ago. So you never know what can happen or who you can meet here. Head to b.tc/conference and use code HODL, HODL, for 10% off. Next up, Speed Bitcoin Lightning Wallet, one of the fastest growing wallets out there. Speed is a secure, low-cost way to send or receive Bitcoin instantly. It's super simple and scores high user ratings. You can even use it to shop gift cards of your favorite brands and earn rewards. Download Speed using the QR code on the screen or the link in my show notes and use promo code COINSTORIES10 to get 5,000 free sats. And finally, the why of Bitcoin is easy to grasp, but the how can be so confusing. The Bitcoin Way is a professional Bitcoin IT and security team offering personalized one-on-one support that guides you through cold storage, setting up nodes, inheritance planning, privacy best practices, and more. Don't take my word for it. Take 82-year-old customer Bill's.
Give the Bitcoin way a try. You will be well on your way to owning and protecting the greatest money ever discovered.
Set up your 30-minute free consultation today. All right, back to the show. Do you think that Bitcoin can actually help solve some of these issues because it has been such a driver of economic empowerment?
Absolutely. I mean, I think what the mistake people think is they have to buy a whole Bitcoin and come up with, $63,000. I mean, they can buy a Satoshi, a Satoshi every day, instead of a latte. And more importantly, if Bitcoin network value plays out and Bitcoin, let's take Urian's number, but let's say Bitcoin is 1 million. Okay, so it's a 20 times increase from here. Anyone who's long Bitcoin won't care about inflation, and
Right.
that's the important thing, because it's really just the dollar getting cheaper. It's not, that's really what they're experiencing.
Right. Short the currency, long, hard assets. I wanted to ask you about the mining sector, Bitcoin miners. They seem to be getting revalued right now based on control of energy generation, and I wanted to get your view.
Yes, it actually makes sense. I think the mining industry, and we with the halving, a lot of the smaller miners got into trouble, and hash power is going to be concentrated. That's actually healthy, because the larger scale miners, as you're pointing out, can be quite innovative, and so I think mining is actually incredibly important. I mean, mining is important for Bitcoin. I mean, there is no Bitcoin without mining, and the miners, I'd say it's been trickier as equities, because I'm thinking about them as stocks, because they are essentially beta to Bitcoin. But I'd say over the course of the cycle, they should outperform Bitcoin. But it's, of course, I know it's been tough, because, we have a lot of clients that have been long miners, and, today's been an okay day, but really for this year, it's been very painful for them to own it versus Bitcoin.
Looking out at other equities, I know that you've had predictions for S&P hitting like 15,000 by 2030. How do you see all of that playing out? Because again, I mean, I know that they're going to have to keep spending and printing, but how do we get to 15,000?
I mean, it's not very hard. What's interesting is, that's a compounded rate of like 15% a year.
Okay.
And I'm sorry, 15% roughly in earnings, and another 5% or so from multiple expansion. And I'd say let's just do a reverse interval. In 2008, when I was at JP Morgan, S&P earnings the year before was expected to be $60. So into the GFC, like the high watermark for earnings was 60. And there were people that said the S&P wasn't even going to make $60 again for a decade. That's why in the GFC, everyone said expect a decade of low returns. And I saw countless models. People said, well, inflation's going to be weak and GDP, and so it'll take forever to get to $60 in earnings again. Well, the S&P 3 years later had $90 in earnings. And, and now earnings are expected to be $280. Okay. So we've gone from $60 to $280 in 14 years. Why do people suddenly think earnings are going to peak at 280? I mean, S&P earnings, is going to be over $1,000 per share in the near future. And I know it sounds incredible, but one of the things driving this, and we've written about it for our clients since 2018, is that the world is running out of prime age workers. So we have population growth, but it's growing faster than the number of people that actually can work. That difference in population means instead of paying wages, you have to pay a company to produce a machine for output. Okay, so that money is recycled into the S&P. By the end of this decade, it's almost $4 trillion a year in wages that are no longer paid to people, but to another company. If it's AI related, that could mean NVIDIA's revenue could be $1 trillion by the end of the decade. And NVIDIA's revenues are 100 billion right now. So NVIDIA itself could be at 10x. I mean, I think people are unimaginative when they don't realize they're not looking back far enough. In 2008, people didn't think S&P earnings would get back to $60 for a decade. So that's 2018. They didn't think we'd get back at $60.
But don't you think there's a shift happening from more passive investing to active again? Because even when you look at these stocks indices, there are a few companies that do tremendously and they offset a lot of them, hundreds sometimes, doing extremely poorly. And so really, if you pick the right winners, including Bitcoin, if you pick Bitcoin, I mean, your gains are tremendously more than anything that you would get by just investing in a standard 60-40 portfolio in S&P 500.
I think that's a good point. But I mean, if you're saying, when people are saying companies are doing badly or poorly, I don't know if they're referring to the stock price or earnings.
Well, generally right now, I think more people are looking at the stock price now. But
yeah, I would say, that's what I would call recency bias. I think the market has been narrow. It's been narrow for the past year, but it's been narrow for the past year because as you started off this podcast, the majority of people think there's a recession, and they're like, well, the Fed is telling us that they're tight, so I got to be bearish. Well, guess what? Those folks have to realize there's a day of reckoning. I mean, the Fed actually isn't hawkish. And I think a recession has already been priced into stocks. But if it doesn't happen, there's a huge, huge breadth expansion that's coming. So I would say it probably isn't going to be a narrow market the next 12 months. I mean, I think people make chronic mistakes that they sell stocks when earnings are bottoming and they buy stocks when earnings are peaking. You got to buy stocks when earnings are bottoming and you sell them when earnings are peaking. Earnings are just beginning to accelerate. So I would say we're at the bottom of an earnings cycle, not the top.
Well, and we've also seen sort of a sector rotation into small caps, right? Led by regional banks. Do you see that continuing?
Yes. At the start of this year, our view was that small caps could rise 50%. That's the Russell 2000 hitting 3,000. And that's still our view, but the timing, as we've pointed out at the start of the year, coincides with when the Fed starts to cut. And now that looks like it's sometime between July and September. So small caps should be basically lit on fire today. The move that small caps had from October to December of last year was almost 30% in 8 weeks. That was only the 21st ever best rally in small caps.
Wow.
We're at a time when small caps are more oversold than they ever have been, at a larger discount to large caps than they ever have been, at a time when there's skepticism, as you're pointing out, when people think there's a recession. So I think that the next 10 weeks, small caps can rise, possibly 40% from here.
You mentioned earlier that there's a greater likelihood of a particular candidate getting elected. How do you see that impacting markets? Do you think one person getting elected over another is going to maybe contribute to a crack up boom?
Yeah, I'd say if Trump wins in November, and betting markets show he is, and betting markets have been getting it right for so many of these cycles, so I don't have any reason to doubt it. It's very bullish for small caps because, one, I think it's going to reverse this downward death spiral for commercial real estate and financials. So financials are 40% of the Russell. It's bullish for cyclical stocks, generally speaking, because I think it would lead to less regulation and a disbanding of a lot of these onerous agencies that have been put in place in the last 4 years. I mean, we've essentially made czars and given huge powers to regulatory agencies that shouldn't be regulating this with such a heavy hand. And to me, that's really bullish for mergers as well. I mean, I think small caps could rise for 12 years. That's what happened in 99. They outperformed for 12 consecutive years. Well, 12 years, not consecutively, but yes, for 12 years.
Doesn't that mean more inflation though, or do you think inflation has really peaked?
I think people shouldn't conflate rising stock prices with inflation. We had stocks rise for the last 100 years and we haven't had inflation in all those periods. Inflation I think people think inflation is so easy to create in the economy. It's pretty hard to create. I mean, look at what's happened with Japan. They've been money printing forever and they can't sustain inflation. Inflation is mysterious, but it's disappearing just as quickly as it came. And I think there's many people that still think inflation is the problem. And unfortunately, they're going to be making a lot of investment mistakes.
Well, I do tend to look at inflation more on the asset side, and we've seen tremendous amounts of asset inflation that's outpacing wages. Maybe, there's a plateau in terms of the consumer prices, but they're still so far higher than they were before the pandemic. And like we talked about earlier, people are struggling. All right, I know we're running out of time. So I'd love to kind of just get you to share your elevator pitch for those watching who are really considering Bitcoin in their portfolio. You mentioned earlier in the show, 1% to 2%. Is that the optimal allocation? If not, what is it? And for those just totally skeptical, why should they finally start to take this seriously despite the volatility they might have seen in the last few months?
Well, I hope it's like it's a big elevator or a long elevator ride. I think 2% should be the minimum. Probably 5% works for many. And I think if someone is younger and has risk tolerance, it can be significantly higher. I mean, I don't have a problem with someone is 25 or 30% crypto, but they're young because time is on their side. I mean, they can wait out a 25-year cycle, and that could be a fabulous investment for them. If they're skeptical of owning Bitcoin, there's many ways to buy it so easily, and they can change their mind. I mean, they can buy an ETF now, and they don't have to hold their private key and worry about securing that and, passphrases. They can just click it on Schwab. I mean, that's the big change this year. And hey, if they have a stop loss of 10%, they can just hold it and sell it if they can't tolerate the volatility. And why does it matter? Well, look, at the end of the day, it's already a new asset class. I mean, there's many asset classes created in the past generation that people forget. Commodities is an asset class that was created through the ETF process. Before that, you actually had to be a direct investor. MLPs and energy is an asset class that was created in this past generation. You couldn't own energy pipelines, et cetera, before unless you were an oilman. Volatility and VIX products and structured products around, the VIX, that all came in this generation. And even owning real estate through bonds and equities. I mean, so to me, if someone doesn't think Bitcoin is a bona fide asset class, they've forgotten many things that are in their portfolios today didn't exist as an asset class one generation ago.
That is a great point. You're absolutely right. Don't be like Germany. Don't sell your Bitcoin. You could get in more easy ways than ever before, but I hope people do take the step to learn about self-custody. Tom, it's been great to talk to you. Make sure to check out my show notes because Tom Lee is offering a free trial. So I'm going to put all the links in the show notes for Fundstrat as well as FS Insight. Tom, thanks so much. We hope to hear from you again soon.
Thank you.
Thank you so much for checking out this episode of Coin Stories. If you're listening on the Fountain app, you can show your support and share your thoughts by sending a boost. Last month's top episode was a Bitcoin and macro hangout featuring Preston Pish, James Lavish, Susie Riley, and special guest Luke Groman. At Ryan Reynolds boosted 500 sats and said, "These hangouts are awesome. Please keep them going." I love reading and replying to your boosts, so download Fountain on iOS or Android today and make sure you subscribe to Coin Stories. This show is for entertainment and educational purposes only. Nothing should constitute as official investment advice, and you should always do your own research. My inbox is open. If you want to share feedback or guest suggestions, just reach out at natalie@talkingbitcoin.com. Make sure you're subscribed to the show and check out my free newsletter, nataliebrunel.substack.com. I'll see you next time.